This is Horizons Middle East and Africa. Our top stories this morning. The euro gains as Germany's Conservative leader Friedrich Merz says he'll move quickly to form a government following his party's election victory. He's also vowed Europe's independence from Trump's America. Israel delays the planned release of hundreds of Palestinian prisoners, accusing Hamas of multiple violations of the ceasefire and hostage release deal. Plus, a show of unity, foreign ministers at the G20 stressed the need to protect multilateralism and international institutions, which are under assault from the Trump administration. It's just gone 8 a.m. Monday morning across the Emirates. It's 3 p.m. Monday afternoon here in Sydney. I'm Paul Allen in for Chanana. Let's take a look at our markets are tracking. Kind of a mixed picture in Asia, but we're seeing some healthy upside for E-minis. S&P futures are currently better by 0.5% now. Seeing a little bit of softness in the oil price, though. Brent there, 74.38 a barrel. We have seen the oil price slip on the expectation that we may see more supply from Iraq. A key pipeline linking Kurdistan to Turkey may be coming back online, although there is no timeline on that. That could mean an additional 185,000 barrels a day coming to the market. So 70% of the traders and analysts surveyed see OPEC Plus once again delaying plans to ramp up production. Let's take a look at the currency of the moment, though, and that is the euro strengthening after that result in Germany. We've got the euro now at 105.19 against the greenback. However, as you can see on that chart there, it does face some headwinds in terms of its 100-day moving average. So we have been here before and seen the euro weaken. Of course, there are geopolitics and tariff tensions to consider. Plus, it's probably going to take a little bit of time to negotiate a coalition government in Germany. So we might see that the euro facing some resistance from here. But for now, pretty healthy gains. The euro up against all of the G10 basket of currencies. Well, let's get a little bit more on that story. Germany's Conservative opposition leader Friedrich Merz says he's going to move quickly to form a new coalition government. Provisional counting data shows his bloc won Sunday's federal election, finishing ahead of the AfD party and Chancellor Olaf Scholz's Social Democrats.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to reestablish a viable government in Germany as quickly as possible.
Well, Bloomberg's Tom McKenzie has the latest in Berlin. Tom, Merz there saying we'll talk to each other. Well, not everybody. He and the other parties say they're not going to work with the far-right AfD. So what's the most likely path for forming a coalition here?
Yeah, Paul, look, if the current results hold and we get final confirmation of those, then there is the opportunity here for the CDU, the Conservatives, led of course by Friedrich Merz, to form that coalition with the Socialists, the SPD, a grand coalition that the markets would favour. Now that is conditional on these results holding. If you get more of the smaller parties taking seats in the Bundestag, then it may be a case where the CDU and Friedrich Merz have to do a coalition that includes not just one other party, but potentially two. So a coalition of three, and that could include the Greens that came in with about 13%. It's worth noting, as you say, all major parties refusing to work with the AfD. The AfD, though, coming in second with its biggest result and the largest share of votes ever for the Alternative for Germany party, the far-right AfD, who will be the unofficial or the official opposition once the coalition talks are done. Now, you heard Friedrich Merz talking about the essence and the need for speed when it comes to forming a coalition. The reality is that history tells us these coalition building exercises in Germany take weeks, sometimes months. You can cast your eye back to 2017 when it took almost 6 months to form a coalition. Now, there is an expectation that because of the pressures domestically and externally that those coalition talks will happen at a more rapid clip, certainly than 2017. Morgan Stanley is saying they could happen at the earliest by April. But Germany's leaders and Friedrich Merz knows that the pressure is on to form that coalition and form it as quickly as possible. But again, it's likely to take weeks.
Yes, certainly some strong motivations here, as you've described. Can you tell us a little bit about the challenges that Germany faces, not just fiscal challenges, but also challenges in terms of defence and migration policy as reflected by that strong result for the AfD?
Absolutely, Paul. And migration was a key topic since, of course, the elections were called towards the end of last year and after, of course, the government, which was a three-way coalition, collapsed in November. Migration came to the fore as a topic. And the AFD, the far-right AFD, said they would want to deport undocumented migrants. Now, that is very unlikely to happen, given that they're going to be in opposition rather than the government. But it is an issue that the incoming government and the Chancellor, Friedrich Merz, will have to tackle. That's one of the domestic issues. The other key domestic issue, of course, is the economy. 2 years of recession for this German economy. Bloomberg Economics predicts just 0.3% growth this year, reviving the industrial base, particularly the auto sector, which makes up 5% of GDP and, of course, faces that domestic challenge, that competitive challenge, I should say, internationally from China. That is a key question going forward. Addressing gas prices and energy prices. The industrial energy cost here in Germany is 3 times that of the US. And then there's the question of the external pressure, potential Trump tariffs. Friedrich Merz says we should avoid a trade war. He says it's up to the EU to respond, but respond they should if tariffs are put in place. But he wants to have a constructive relationship with the Trump administration when it comes to the question of trade. But he's also pretty clear-eyed on the fracturing of that transatlantic relationship. And he says he wants to, step by step, make sure that Europe and Germany is becoming more independent of the military umbrella of the US. So building out the defense base is going to be a priority for his. How you spend on that is a key question. He says he is open to potentially relaxing this debt brake that constrains spending or at least borrowing in Germany. He is potentially open to that, but you have to have a 2/3 majority in both parliaments, both sections of the House, both parts of the Bundestag to get that through. That is going to be an absolutely key thing to watch. After the coalition building, will they relax the debt brake to allow greater spending? Debt to GDP in Germany is just 60% versus 120% in the US. So they have the fiscal space, they just need the political will to get that through.
All right, Bloomberg's Tom McKenzie there in Berlin. Thank you. Well, let's check in on how markets are faring now in Asia. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, we've also been tracking any potential ripple effects from the German elections over the weekend. And as traders sell the dollar, buy euro, some of these EM Asia currencies have been riding that wave, but that's not the case for the yen. It is among the G10s that are ceding ground to the euro today amid optimism that a government can be formed fairly quickly. We are also tracking what's happening in Chinese tech. Of course, that rally, blistering one so far this year, has been a focus. And today it's taking a bit of a breather. You have geopolitics in the mix. Trump is recently talking about how even some of these key government committees should be curbing Chinese spending in key sectors, including technology, among his latest salvos. So that's not helping some of the tech names in China. And this is despite Alibaba pledging investments upwards of $50 billion over the next 3 years on AI, cloud infrastructure. This is higher than some earlier analyst estimates. So it's mostly negative today. Of course, this is also tracking Wall Street's worst session so far this year on Friday. Paul.
All right, Avril Hong in Singapore. Thank you. Well, Israel has delayed the planned release of hundreds of Palestinian prisoners, citing what it called multiple violations by Hamas of the ceasefire and hostage release agreement. Now, the delay puts the entire ceasefire agreement at risk, while also raising questions over whether the truce will hold. The first phase of the truce is scheduled to end on March the 2nd. Joining me now is Paul Wallace, who leads our Middle East and North Africa economy and government coverage. So, Paul, does this delay present a real threat to the already fragile ceasefire?
Hi, Paul. Yes, I think it does definitely present a threat. Hamas says this is a clear breach of the ceasefire terms. That is Israel delaying the release of these 600 odd prisoners from Israeli jails, and we've got to see what happens. The rest of the truce is meant to see one more exchange. Four bodies are meant to be released by Hamas from Gaza, and then another prisoner exchange. But we're sort of stuck in limbo limbo at the moment. This is, of course, not the first time there've been accusations between the two sides over the breach of the truce terms, and in fact, certain parts of it have been delayed over recent weeks already. So it is possible this still goes ahead. As far as Israel is concerned and its government and Prime Minister Benjamin Netanyahu, there's a lot of pressure on him both ways. There's a lot of pressure on him to continue with this ceasefire until all the hostages, both the living ones and those who have died, are released. But there's also a lot of pressure from him, including from some cabinet ministers, to resume fighting. There's among many Israelis, there's a sense that with Hamas still in power in Gaza and still armed, that the country cannot afford to continue with sort of an indefinite or permanent ceasefire, that it needs to go back to war with Hamas sooner or later.
Well, Israel's also been conducting an operation in the West Bank for a year now. What's the latest on that? Well, not a year.
Well, yes, this is all part and parcel. Exactly, that's what Israel is saying, and this is all part and parcel of the war in Gaza. Essentially, the West Bank, the bigger of the two main Palestinian territories, has been parts of it have been very restive since October the 7th, 2003, when Hamas attacked Israel from Gaza. Deaths there have really soared, and Israel says it needs to carry out these operations to clear out militants in places like Jenin in the north of the West Bank. It is, of course, highly controversial among Palestinians, and many of them have had to. Civilians have had to move out of these areas, and there's no certainty as to whether they can move back to their towns and refugee camps, and quite a few of them are being killed as well. So it does look as if Israel is not going to back off from these military operations in the West Bank anytime soon, and it is setting the Israeli public, and I think Palestinians, up for the reality that they will continue for many more months, if not for a year or more.
All right, Paul Wallace, who leads our Middle East, North Africa economy and government coverage. Thank you. At a group of 20 foreign ministers gathering in Johannesburg, countries stressed the need to protect multilateralism and international institutions. The US didn't attend the meeting, Secretary of State Marco Rubio withdrawing and criticising South Africa's G20 goals and domestic land policy. Now the European Union and South Africa are vowing to forge closer ties after previous disagreements led to a frosty relationship. Joining us now is Jennifer Zabasaja, Bloomberg's chief Africa correspondent. So, Jen, South Africa getting closer to the EU. Is this going to help fill the gap left by the US?
Well, Paul, I think it depends who you talk to. You know, if we take a look at the EU's top diplomat that was actually here in town for this foreign ministers meeting, she would say, yes, you know, this is a time for the EU and South Africa, which in the past had pretty wide gaps in terms of their stances on a number of issues. She said it's time to settle the past and move forward. But still, Koya Kallis is her name. She said that it's still unlikely that they can fill the gap that the U.S. has. And she said that, namely, when you think about, at least financially, the contribution that the U.S. Contributes to a group like the G20, even if you take a look at the aid that the U.S. had provided to a country like South Africa through something like USAID. And so the elephant in the room was really the U.S.'s top diplomat, I guess we should say, not being there. The U.S. was still represented by a few other leaders there, but still a number of foreign ministers talking about the future of G20 and what multilateralism actually looks like, especially if you take a look at even the members that make up the G20 and their stances on current issues. But yes, we are seeing the EU and South Africa forge closer relationships. Next month, they will hold a summit together, and we are seeing a doubling down of the strength between these two, this country and the bloc.
Well, you sat down with Turkey's foreign minister. He said the EU membership stalemate's pushing Ankara towards other economic platforms. What more did he have to say here?
Right. This was fascinating. You know, there were a number of things we wanted to talk to him about, but one of the top things we wanted to ask was really what the discussions were for Turkey to join BRICS. And BRICS, of course, is Brazil, Russia, India, China, South Africa, this group that has continued to expand over the past few years. And we wanted to ask him what the potential is for Turkey to join this grouping, especially when you've seen Turkey over the past few years sort of being chided by the European Union. Here's what part of what he told us.
The economic union of European Union was a good target for us and still an official political objective for us. But unfortunately, the Europeans have not thought in the same way, because they managed to become a supranational civilization, but they failed to become a supra-civilizational one, and they've never asked themselves. Why I'm telling this? Because they refuse to have a big Muslim country into their ranks. So, given this fact, against the backdrop of this fact, we've started looking at the other economic platforms, other economic cooperation platforms, like BRICS, you know, to see what kind of merits that they have, what are the advantages, what kind of institutional mechanism they have or they don't have.
And what he told us really gets to the heart of a lot of the divisions that we're seeing within G20 members and within a number of countries globally, is that there isn't really a consensus, a cohesion with some of these blocs and their stances on issues. That was just one point that he was making there for us. But this is certainly going to be a challenge moving forward for the G20 throughout the rest of the year, especially if they're trying to promote this sense of multilateralism. How do you get a bloc of countries together if they are so far apart on a number of the geopolitical issues, and how to address them moving forward?
All right, Jennifer Zabasajja, Bloomberg's chief Africa correspondent. Thank you. Still to come, we're going to talk investment strategy with Saxo as investors weigh tariff concerns and look ahead to Nvidia earnings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Well, stocks in Asia are trading lower after Wall Street's worst session of the year. Treasury futures also slipping. And to gauge the dollar weakening amid concerns over US economic data and tariff tensions. Joining us now is Charu, Chanana, Chief Investment Strategist at Saxo. And Charu, I want to start, if I can, on the foreign exchange topic. I mean, the US dollar has been very strong, but losing ground against the euro today, which has rallied following the election in Germany. But considering the headwinds, the tariff and trade environment, the time it's going to take to form a coalition in Germany, do you see that strength enduring for the euro?
Hi, Paul. Thank you for having me. Certainly, I think I would have, looking at the results of the German election, expected a slightly less upbeat reaction from the euro here. Because, as it can be sensed that the mandate for the winning party is not as strong as that was anticipated. It certainly seems like there's going to be some weeks and months of negotiation ahead to form that coalition. And but, despite that, we're seeing that kind of a reaction for the euro, which says two things, particularly one, whatever kind of a coalition comes up in Germany, certainly I think fiscal expansion will be prioritized given the kind of risk that is facing the Eurozone economy and German economy in particular. And secondly, also, it is about that turnaround in the US dollar, which has already started on the back of that weakening economic data in the US, on the back of expectations that the fiscal expansion in the US may not be as large as what we've seen in the previous administration. I think there is a sense that the US dollar is turning around. We have seen that convincingly on the dollar yen side, not so convincingly on the other pairs particularly, but I think euro might be the next one to pick up that slack in the US dollar now.
Yeah, and if we take a look at that tariff environment as well, Bloomberg's reporting that President Trump is now encouraging Mexico to put its own tariffs on Chinese imports, thereby avoiding US imports. So this whole picture just seems to get more complex and interwoven by the day. So how much more complicated do you see the trade environment getting, and how do you invest in this kind of environment?
So with all of these announcements around tariffs that we've seen since the new administration's inauguration in the US, I think the markets have for now come to the conclusion that tariffs are being targeted and being used as a negotiation tool here. We've certainly not seen the kind of 60% tariffs that were kind of talked about during campaigning. So I think the market's baseline assumption is very clear here. They think that the tariffs are for negotiation. There are certainly some very clear objectives behind those tariffs, something like national security, resource and economic nationalism. I think those priorities continue to be very, very key. And with those in mind, tariffs will be targeted accordingly. So this is still, I think a better kind of an outcome than what some had feared. But what this means is, in terms of your investments, I think particularly this means that there is going to be an increased focus on shifting manufacturing back to the US. That does mean US industrials, US construction will be particular focus area. If you are very US focused investor, there is a focus on energy and chips and how to kind of ensure resilience in the supply chain of these key items. I think that will obviously be a key focus area. But of course, given the high valuations of the US stock markets and that wow factor really missing from the tech earnings this time, I think it really emphasizes the point that there has to be some level of diversification of portfolios, whether you look at how European markets have outperformed year to date, or even the China markets kind of just rallying on the back of that AI development, plus also, of course, low valuations playing a big part there.
Yeah, you talk about the wow factor. Well, we've got one coming up this week. It's NVIDIA earnings on Wednesday. Are you anticipating this company once again blows all of our high expectations out of the water? Is it going to be a different story this time? And just more broadly, how are you approaching the AI story?
Absolutely. I think NVIDIA is going to be one very critical factor this week, and it is probably not going to be enough for them to just really come over and above expectations. I think during the conference call, they really have to take the time to address DeepSeek and the kind of costs that they've been putting in the development of AI versus what China is doing, and really kind of make a strong case. So I would think that the bar for NVIDIA is really high, even though we've seen some amount of correction in the valuation story there. I think the whole China, DeepSeek, Alibaba development really poses huge risk to this NVIDIA earnings this time. I think the AI story in general has really moved a little bit further away from the hardware side, from chip side, to really expanding towards sectors that can really monetize AI. We've seen that with Meta. I think the monetization of AI has really given them the bargain to even continue spending. Unlike the others who are continuing to spend, they've been spending for many quarters now. But since they've not been able to show that kind of a monetization, they've been certainly punished a lot more. So I think we really need to watch here where AI monetization really comes out from.
Yeah, you mentioned Alibaba there, which has had a very impressive start to the year. Do you feel the momentum for the AI story is shifting to Chanana and some of these names that have been undervalued up until now?
It's still early, I would say. We can certainly say that the momentum has shifted and the valuation has played a huge role there. That low-cost OpenAI model has certainly also allowed a large number of companies, and will continue to allow a large number of, particularly Chinese companies, to adopt AI and really show that AI monetization potentially much faster than what US companies are able to show, because the model in the US has not been open sourced. So I think there is a clear optimism here, and the markets are reacting to that. But of course, what is a hindrance in China markets really is the regulation. Now, there has been some optimism around regulation aspect as well, but whether that continues or not, whether that comes out in the March 2 sessions or not, I think that will really be the key factor to watch.
All right, Charu Chanana, Chief Investment Strategist at Saxo. Thanks so much for joining us. Well, we will have the Open in the US in a few hours' time. Let's take a look at how futures are shaping up. And after a pretty rough end of the week, we do have futures pointing aggressively higher at the moment, better by about 0.5%. Similar story for NASDAQ futures as well. Of course, markets will open in Europe shortly as well, following the German election. We're seeing some upside for Euro Stoxx 50 futures there, also about 0.5%. Still to come, Berkshire Hathaway's operating earnings surging 71% in the fourth quarter. We'll discuss what's driving growth for the conglomerate up next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The euro gains as Germany's Conservative leader, Friedrich Merz, says he'll move quickly to form a government following his party's election victory. He's also vowed Europe's independence from Trump's America. Volodymyr Zelenskiy says he'd be ready to step down as president if it were to guarantee peace and NATO membership for Ukraine. Plus a show of unity, foreign ministers at the G20 stressing the need to protect multilateralism and international institutions, which are under assault from the Trump administration. It's just gone 8:30 Monday morning across the Emirates. It's 3:30 Monday afternoon here in Sydney. I'm Paul Allen in for Chanana. Let's take a look ahead to the open in the US. We've got futures currently pointing higher, quite impressively too, by about 0.5% after a pretty bad day for US markets on Friday to close things off. Got the oil price showing a little bit of softness as well. As usual, a few questions over the supply picture for oil. It is being reported that Iraq through Kurdistan may be bringing on substantially more production should a pipeline to Turkey reopen, and also some expectation that OPEC Plus might once again delay its plans to ramp up production. Also keeping an eye on the euro as well. We're seeing it gaining against the basket of G10 currencies right now, 105.13 against the greenback. Questions, however, about how sustainable this rally is going to be, because we have been here before. It is bumping up against that 100-day moving average resistance level once again. Of course, Germany facing a number of problems, not just on the domestic front in terms of spending plans, but also the length of time it often takes to put a coalition government together in Germany, all the while dealing with external pressures such as the geopolitical environment, the security situation in Ukraine, and tariff tensions as well. Well, let's check in on how markets in Asia are doing. In the meantime, Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, I mean, you talk about euro dollar facing a bit of resistance. I think we're seeing resistance in Chinese tech rally as well. That's been red hot for much of this year, but it's stalling a little after 6 weeks of gains that we've seen on the Hang Seng Tech, perhaps not helping the geopolitics of it all, with Trump with a series of measures, his biggest salvo yet in his second term, including proposing maritime fees, including instructing some of these key government committees to curb Chinese spending in key areas, including technology. So maybe that's not helping the risk appetite towards Chinese stocks today, but we are seeing those that believe this rally can continue, perhaps also the outperformance versus the US peers. If you take a look at this chart from MLive's Mark Cranfield, it shows you that bit of divergence, especially since the middle of January, and perhaps also these Chinese tech stocks could give decoupling with their US counterparts another go. You think about how the AI narrative have really been boosting these Chinese tech names. Today, we get positive headlines as well from Alibaba pledging upwards of $50 billion in terms of AI cloud infrastructure investments over the next 3 years. So something to keep in mind even as we see Chinese tech stocks under pressure today.
All right, Avril Hong in Singapore, thank you. Well, speaking with Bloomberg from the sidelines of the G20 summit, Turkish Foreign Minister Hakan Fidan gave Turkey's stance on Ukraine becoming a NATO member.
Given the fact that Mr. Trump is very much eager to really stop the war, so he has already started talking to Russian side one-on-one. So I think this means a lot.
Do you have thoughts on President Trump changing his mind again about the U.S. administration's stance on Ukraine joining NATO?
I'm not sure if the previous administration was also in favor of Ukraine joining NATO. So I think there is no new policy on this.
Well, he's saying Ukraine should not be a part of NATO whatsoever. Yeah. I mean, he's making that pretty explicit. I mean, how does Turkey then feel about it?
Well, this is something that we've been discussing with our European partners and the Ukrainian friends. Certainly, look, we have to understand one very fact: Ukrainians asking for NATO membership just not because for the sake of being a NATO member. It's just to see a security guarantee for their own country. So if they engage, let's say, a ceasefire agreement or a peace agreement, some sort of security guarantee, this is what they think is necessary to engage such a thing. Because if the war emerges, so what will be the security guarantee for them? This is what they are seeking. I think now the security guarantee for not seeing the war re-emerging is one of the primary questions that we are discussing in negotiations. So the Ukrainians, one of the ways that they want to see is NATO membership, right. If not creating a big international coalition to deploy alongside the contact lines, or the Russians might have different ideas for guarantee and security guarantees. Those are the issues that we are discussing with alternative scenarios.
Does Turkey believe, though, that Ukraine should have NATO membership?
Well, we wouldn't mind if they want to be NATO member, but we have to be very much realistic, because we openly stated that we are in favor of Ukraine to be a NATO member.
That was Turkish Foreign Minister Hakan Fidan speaking with Bloomberg's Jennifer Zabasajja at the G20 summit in Johannesburg. The Ukrainian President Volodymyr Zelenskiy says he's willing to step down if it means peace and NATO membership for his war-torn country. Speaking in a news conference in Kyiv on Sunday, Zelensky said he would happily trade his presidency for Ukraine's NATO membership if such an offer was made.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Meanwhile, Bloomberg has learned Ukraine is pushing back on US demands for a $500 billion fund as part of a deal giving Washington a cut of its mineral wealth. The fund would compensate the US for its assistance to Ukraine, but a source says Ukraine argues the actual amount is about 5 times lower. Bloomberg has learned that the EU is exploring more ways to seize Russia's frozen central bank assets as it scrambles to ensure more support for Ukraine. We understand officials are discussing how assets could be used as collateral by a planned International Claims Commission, which will determine compensation owed to Ukraine. Berkshire Hathaway's operating earnings surged 71% in the fourth quarter, driven by higher interest rates and a recovery in its insurance underwriting business. Meanwhile, the firm's cash hoard grew for the 10th quarter in a row to a record $334 billion at the end of 2024. For more on this, let's get to Bloomberg's Asia Deals team leader, Manuel Begori, who's in Hong Kong. So, Manuel, that's a staggering pile of money. That's, what, a third of $1 trillion that Berkshire's sitting on. They're not getting into keeping cash, but what's the plan to deploy it?
Definitely. We've seen a remarkable increase in earnings over the weekend from Omaha and Berkshire Hathaway. Definitely showed the massive increase in operating income, mostly driven from investment and insurance. And definitely, as you well pointed out, the need to deploy capital remains there. And Warren Buffett highlighted how he doesn't like the idea of hoarding too much cash. So we'll see over the coming months how he deploys capital. Obviously, he strongly hinted at Japan, the trading firms where he already holds a significant minority stake, and they also, these firms, hinted how they may relax that 10% threshold. So that could be an area of opportunity. There was a lot of talk about private equity investments as well doing well, and there is definitely a reduction or a trend in reducing the exposure to public equities. So that shall remain potentially over the coming months. All in all, it was a pretty balanced earnings presentation. The mood was quite positive, even if some of the analysts kind of were a little bit more cautious and took some of the latest actions from Warren Buffett as a sign that the U.S. economy might be cooling off slightly.
Yeah, on that note, what did Warren Buffett have to say about, not just the outlook for Berkshire Hathaway, but for the U.S. economy more broadly?
Indeed, it was one of the topics of broader discussion. There remains a certain level of cautiousness, although, as mentioned, there are a few bright spots. I think the insurance business doing better than expected. Also, the fact that the losses from the wildfires in LA were more or less contained, and then areas such as industrials that remain hot areas of investment for Warren Buffett should offset potential declines in other sectors. That said, there certainly is a potential concern over whether especially public markets might be potentially heading to some sort of correction. So I think it's still a little bit too early to tell the direction of travel for the next few quarters, but definitely there is the sense that some concerns might be lurking out there.
All right, Bloomberg's Asia Deals team leader, Manuel Bagori, thank you. Let's take a look at some of the other stories that we're following. Several US government agencies have advised employees to ignore, for now, a demand from Elon Musk's Government Efficiency Office to justify their jobs or face dismissal. The Trump administration started sending emails to more than 2 million federal workers over the weekend, ordering them to report on what they accomplished last week. The deadline to reply is just before midnight on Monday. Pope Francis remains in a critical condition for a second day as he continues to battle severe pneumonia. The Vatican says the 88-year-old pontiff is still receiving high-flow oxygen to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the Pope continues to be alert and well-oriented. Still to come, Saudi IPO boom. We're going to discuss what's driving the flurry of listings in the kingdom next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Let's turn to Saudi Arabia now and the flurry of IPOs in the works. The kingdom seeing a boom with more than $4 billion raised in 2024 and a robust pipeline expected this year. A couple of sectors in focus, healthcare and autos as well. For more, our Mideast Money reporter Laura Gardner-Cuesta joins us. So, Laura, talk to us about some of these listings. Can you tell us how the IPO pipeline's looking? I know we've got a couple of car rental firms in there. What does that tell us about ideas around tourism in Saudi?
Exactly. Thanks, Paul. So the IPO pipeline in Saudi is shaping up to be really busy this year. We've already seen in the first few weeks of the year, we've had a few firms come to market already. We've had a real estate developer in Mecca open books. We've had an online broker and a poultry business. And as you mentioned, there's a few more in the works, including a few car rental firms, which, as you said, indicates that there's an expectation that this tourism push will lead to a boom in car rentals, which we're already seeing. And so, yeah, it looks like really this pipeline shows that it's this diversification that the government is really pushing in the economy to try and steer it away from oil is really reflecting in the country's equity capital markets.
Yeah, and what's Saudi Arabia doing to boost its equity capital markets?
Yeah, so I just came back from a week in Riyadh last week for the Capital Markets Forum, and it was really interesting to see some of the initiatives that Tadawul has been pushing. They announced a new management system that essentially is going to streamline the process of book building their IPOs and ultimately reduce the cost. And we've also heard that they're expecting more M&A, and they're pushing things like ETFs with Saudi stocks to really boost their equity capital markets. So, yeah, it's one to watch for sure.
All right, Laura Gardner-Quest, Bloomberg's Mideast Money reporter. Thanks for joining us. For more of these stories looking into the intersection of wealth and power in the region, you can sign up for our Mideast Money newsletter on Bloomberg.com. Now let's take a look at some of the other stories that we're following. Senegal's credit rating has been cut by Moody's after a court of auditors established that the country's finances during the final term of former President Macky Sall were weaker than previously documented. The nation's long-term foreign currency rating was lowered by 2 notches to B3, which is 6 steps below investment grade. The outlook was set to negative after being placed on watch for a downgrade. Bloomberg has learned Kenya expects to receive a $1.5 billion loan from UAE by the end of this week. We understand the East African nation will get the financing in one go, reversing an earlier plan to stagger the loan. The nation tapped the Gulf state for the funds last year to diversify its budget financing sources. A Nigerian court has ordered the forfeiture of cash and properties traced to the former governor of the nation's central bank, after determining they were the proceeds of unlawful activity. The country's anti-corruption agency says the court made the order against Godwin Emefiele, who was removed by the central bank governor in 2023. Emefiele denies any wrongdoing. A Ugandan court has charged an opposition leader with treason over an alleged plot to end President Yoweri Museveni's 4-decade rule of the East African nation. Seated in a wheelchair, Kizza Besigye, who denies the charges, appeared in court in the capital Kampala 3 weeks after Uganda's Supreme Court barred his trial in a military tribunal. The charge of treason carries the death penalty. Still to come, the US said to be turning up the heat on Mexico to impose tariffs on Chinese imports. We'll have the latest on Trump's tariff threats next. This is Bloomberg.
There's no question that drones have altered the dynamics of military operations. Unmanned aerial vehicles, or UAVs, have been in use for decades, including in the Cold War, Vietnam, and by the US to strike remote targets after 9/11. But on today's battlefields, it's different, not least because of the sheer volume of UAVs in the skies.
The current war in Ukraine is very much a drone war already.
The situation has been mirrored in the Middle East, with Hamas and Israeli forces deploying UAVs extensively. It's a signal of what's ahead, with the US spending hundreds of millions of dollars to secure new drones through its so-called replicator program.
If there's a major power war, it's very much going to be a drone war.
Technology is moving fast, particularly as artificial intelligence is integrated into UAVs.
Air superiority in a future conflict is not just going to be about fighter jets. It's going to be about drone swarms and loitering munitions and AI-powered targeting systems.
There's also a question of quantity, as military forces need to procure large numbers of less advanced drones. This has been a weak spot for the US and its allies.
US and many European states, they've actually for a long time been investing a lot more in the sort of more sophisticated long-range drones that have lots of sensors to them. It's really the mid and lower end stuff that they're trying to build up numbers, because as we've learned from the Russian-Ukraine conflict, the numbers do matter.
But China is the leader in commercial drone production, with its firm supplying around 80% of the global consumer UAV market. And Beijing has long seen these as a dual-use technology.
They've been real pioneers in cheap commercial drones, which can be adapted for military use.
It's clear that this is an area where China is putting intense capital
but also policy focus. I think the Chinese recognized quite early that drones could be the difference between victory and defeat.
Now Beijing's rivals are racing to catch up. Annabelle Drulers, Bloomberg News.
That's our tech reporter Annabelle Drulers explaining the role of drones in warfare. The Trump administration said to be turning up the heat on Mexico to place their own duties on Chinese imports as part of their efforts to avoid threatened duties from the US. Well, let's bring in Bloomberg Asia's senior editor Bill Ferries, who's in Singapore. So, Bill, what do we know specifically about the US request and which officials were involved in making it?
Yeah, it sounds like the U.S. has approached Mexico, including Economy Minister Marcelo Ebrard and President Claudia Sheinbaum, to talk about having Mexico impose tariffs on Chinese imports as a way, perhaps, of avoiding U.S. tariffs on Mexican goods. Behind this all is that lingering threat of 25% tariffs on Mexican goods. The U.S. says it wants Mexico to crack down on a flood of Chinese imports and on fentanyl and immigration, a number of undocumented migrants. So it sounds like the Mexican officials have been talking with new Commerce Secretary Howard Lutnick, along with the U.S. Trade Representative nominee, and Kevin Hassett, who's a top White House aide, economic aide to Donald Trump.
So where does this leave the broader issue of potential U.S. tariffs on Mexico?
Yeah, if you remember that tariff threat that came in from Donald Trump in the early days of his presidency, those tariffs were delayed until early March. I think March 4th is the date, which is obviously next week. So this might be another way, if there's any progress in the talks between the U.S. and Mexico, to further delay that 25% tariff. It could also help President Sheinbaum in Mexico to deal with the influx of Chinese imports that a lot of countries are dealing with because of China's overcapacity. So it could serve Mexico's interests, but it certainly would serve the administration's interests if they can get Mexico to agree to this.
All right, Bill Ferries, thank you for joining us. Let's look ahead to the start of trade in both the US, Europe as well. We've got futures on the S&P looking pretty positive. It was a really wretched end to the week last week for US markets. All the major indexes ending in negative territory, but we're seeing some pretty much a risk-on sentiment ahead of the start of the new week. S&P futures, they're better by about 0.5%. Also got stocks 50 futures in positive territory, and of course we are coming off the back of an election in Germany. Pretty clear-cut result, very much in line with what the polls were predicting, but now the long period of coalition horse trading begins. This can often take weeks, sometimes months, although there will be an added sense of urgency in the current geopolitical environment for Friedrich Merz, the likely new Chancellor of Germany, to pull that coalition together pretty quickly. Let's take a look at how the bond market is performing as well. Japan is, of course, closed today, so there is no trading in US debt. However, we do have the bond futures to guide our way, and we're seeing a little bit of softness there for all across the curve at the moment. 10-year bond futures down about 0.1%. Well, that is it for the first hour of Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us. Jennifer Zabasaja joins from Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The euro gains as Germany's conservative leader Friedrich Merz says he'll move quickly to form a government following his party's election victory. He also vowed Europe's independence from Trump's America. Israel delays the planned release of hundreds of Palestinian prisoners, accusing Hamas of multiple violations of the ceasefire and hostage release deal. Plus, a show of unity. Foreign ministers at the G20 stressed the need to protect multilateralism and international institutions, which are under assault from the Trump administration. Good morning. It's just gone 7 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. And of course, it was a busy weekend for Europe and a busy week ahead for the markets. So let's just take a look at where markets are positioned ahead of the trading day and the trading week. We are seeing U.S. equity futures starting off in the green there, just up just about 0.5%, which is surprising given what we saw at the end of last week, which was quite a losing week for Wall Street, with the S&P closing down more than 1.66%. That came after some data that we got on Friday. The week ahead, though, includes some key earnings, including from the likes of Nvidia, as well as some data points from economies, including the U.S. There's also Germany, Japan, and France that we are waiting for. Let's take a look at the euro-dollar cross as well. Right now, the euro is seeing some strength right now, and that notably against the dollar, and that is coming after Germany's conservative opposition leader, as we mentioned on Sunday, won those federal elections and committing to quickly move and form a government. And so the dollar is trading down. This is just a look at what we are seeing in terms of our terminal this morning. Our MLive team is thinking that this euro strength may not actually be sustained. We're seeing the euro dollar strengthening, the euro, as we were mentioning there, but we have seen this point happen a few times before. This 100-day moving average has been tested before, but it has failed to break above this point. And so the question is, will this be sustained, especially if you take a look at a lot of the uncertainties that we are faced with right now, including geopolitical tensions and also tariff dramas. But let's just stick on the top story, and that is in Germany. Germany's conservative opposition leader, Friedrich Merz, says he'll move quickly to form a new coalition government. Provisional counting data shows his bloc won Sunday's federal election, finishing ahead of the AfD party and Chancellor Olaf Scholz's Social Democrats.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also, in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to reestablish a viable government in Germany as quickly as possible.
Bloomberg's Tom McKenzie has the latest from Berlin. Tom, Merz and the other parties say they won't work with the far-right AfD. So what's his most likely path then for coalition?
Yeah, look, these results are largely in line with the polls, but that does not detract from the fact that the political landscape in Germany has been radically altered, and part of that is down to the gains that we've seen for the far-right AfD. Placing number 2, they are going to be the official opposition party. It's the best vote outcome for the AfD in that party's history. The CDU, the Conservatives, coming first place. So Friedrich Merz will be the Chancellor, and to your point, that means he is in a position now to start those coalition talks. And he's talked about the urgency of needing to act quickly. He says the world will not wait for Germany, will not wait for us. We need to act quickly on coalition talks. The most likely coalition, and this would be a market-friendly outcome, would be a grand coalition between the Conservatives, led by Friedrich Merz, the CDU, alongside the Social Democrats, the SPD, so the party of current Chancellor, outgoing Chancellor Olaf Scholz, which fared and had its worst election outcome since World War II. Nonetheless, the SPD, the Social Democrats, and the Conservatives could form this grand alliance, this grand coalition. That would be market-friendly if these provisional results hold. Lots of questions about to what extent they will need to rely on other parties to push through changes, for example, to the debt brake. But at the moment, it looks like talks between the CDU and the SPD are what going to transpire. Weeks, months, potentially, in terms of these coalition talks. Morgan Stanley says it's unlikely you'll get a coalition before April.
And Tom, lots of questions, too, on the priorities then for this government. We saw overnight Trump congratulating the expected winners here. What is priority then for this new government?
I mean, the list of priorities, domestic and international, are long. The domestic economy, of course, has flatlined for the last 2 years. The auto industry, which makes up 5% of GDP, of course, is going through a crisis. There's the need to lower energy costs. Industrial energy costs are 3 times higher in Germany than they are in the US. There's the question about migration, of course, and concerns there, which, of course, the AfD tapped into. Then internationally, there's the threat of tariffs. There's the need to build out a defence here in Germany alongside European partners. And Friedrich Merz has talked about that as well. One of the key priorities could be whether or not they reform the debt brake. Now, Friedrich Merz says that's not his priority, but his coalition partners could change that. That would allow this coalition government, the future coalition government, to spend more on things like defence and changes around this economy to revitalise the industrial base of Germany. Those are some of the key priorities that will have to be challenged, or have to be wrestled with by this new coalition government, whatever shape and form that takes.
Bloomberg's Tom McKenzie in Berlin. Great work from you and the team over there, Tom. Thanks so much for joining us. Let's, though, check back in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, a bit of a mixed day to start the week.
Yeah, if you're talking about stocks, we're seeing that mostly lower, but let's focus as well on what we're seeing in the FX space, because that's really interesting. We were tracking the German elections over the weekend as well, and coming into it, I think the consensus was that it would take a while to form a government. I'm not sure if the results so far actually change things, but there seems to be some unwinding of position underway. And given the euro surge, that's also against the yen. The dollar slump is helping some of these Asian currencies. The Bloomberg Asia Dollar Index, highest level since early December. Of course, some of this is amid the fading of the narrative of U.S. growth exceptionalism, given the data we've been getting out of America of late, but also keeping an eye on some of these geopolitical developments, because Trump has given his biggest salvo against China in his second term so far. And these include measures that could see restrictions from U.S. pension endowment funds on investing in Chinese tech. So we're back from the lunch break in China. Hang Seng Tech declines accelerating, keeping an eye on that as well. We have the likes of JP Morgan saying, given some renewal in US-China tensions, that Chinese stocks rally could be at risk here.
All right. Thanks so much, Avril Hong in Singapore for us. We'll check back in with you in just a bit. Let's turn to the Middle East, though. Israel has delayed the planned release of hundreds of Palestinian prisoners, citing what it called multiple violations by Hamas of the ceasefire and hostage release agreement. The delay puts the entire ceasefire agreement at risk, while also raising questions whether the truce will hold. The first phase of the truce is scheduled to end on March 2nd. Let's go to Jerusalem now and bring in Bloomberg's Dan Williams. So, Dan, does this delay present a real threat, again, to the already fragile ceasefire that we've seen over the past few weeks and months?
It certainly does. The question is, however, whether that threat is something that would precipitate an inevitable breakdown of these talks, or whether the talks were on their way to producing fruit in the form of the second phase of the Gaza deal. It's worth remembering that the second phase would entail, as far as Hamas is concerned, Hamas retaining its weapons, perhaps retaining power in the Gaza Strip. As far as Israel's concerned, there's no way of entering a long-term truce. That's what the phase 2 is about, while Hamas is still there, while Hamas still has its weaponry and its clout. This position is supported by the United States, which is meant to be sending its envoy, Steve Witkoff, here on Wednesday to sort things out. So it's quite possible that this dust-up over what Israel has described as an undignified, a humiliating set of theatrics Hamas has been staging around recent hostage releases, including parading the bodies and coffins of the Bibas family, a woman and her 2 children, and then delivering bodies only for Israel to discover that one of them, they thought this woman was among the bodies, was actually that of an anonymous woman from Gaza, forcing Hamas to come up with the right body. That caused a great deal of outrage in Israel, and it culminated 2 days ago with Hamas actually bringing 2 of the remaining hostages in Gaza, hostages that would not go free unless a phase 2 is reached, and filming them watching hostages going free. Of course, their reaction was one of great sadness, great appeals to Israel to save them from their predicament, from being held for yet more days in Gaza. They've been there for more than 500 days. So there is a big problem here, and it's a question about whether this deal can be preserved.
And Dan, if we look over in the West Bank, we're hearing Israel now saying its operation there could potentially continue for a year. How did we get to this point? What are you hearing?
I think it's no coincidence that this mission in the West Bank was launched during the truce in Gaza, Israel effectively diverting forces to the second Palestinian territory, where it says Iran has been reinvesting, redoubling efforts to foment violence among Palestinian militant groups that it sponsors. Keep in mind that Iran has recently lost some of its proxy power around Israel with the depletion of Hamas capabilities during the war, with the gutting of Hezbollah in Lebanon, with the fall of the Assad regime in Syria. So it would appear that in the West Bank, that is where this proxy war is now being focused. Israel sending tanks, indeed, to one part of the northern Gaza Strip, saying its forces will be there for the coming year. It's basically signaling that it wants to do, I'm sorry to use the metaphor, but a root canal, something that would be profound and long-term in terms of reversing some of the factors contributing to violence there.
Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for your reporting and for joining us this morning. Now, let's turn back to the region here. G20 foreign ministers meeting in Johannesburg have stressed the need to protect multilateralism and international institutions. Top U.S. diplomats are not attending the meeting, with the Trump administration criticizing South Africa's G20 goals and domestic land policy. Now, the EU and South Africa are vowing to forge closer ties after previous disagreements led to quite a frosty relationship. Joining us now is Anthony Squazine, Bloomberg senior reporter, and he's here in Johannesburg. Anthony, South Africa getting closer to the EU. I know you spoke with a few officials about this. Is this actually going to lead to a gap being filled by the U.S. potentially retreating?
Well, possibly, yes. The EU is very important to South Africa, about $46 billion a year in two-way trade. So it's actually twice the size of the US. But the EU does feel a bit ignored. Relations have been a little bit frosty in recent years over South Africa's perceived support of Russia in the conflict against Ukraine, or what South Africa describes as an non-aligned position. And we've had Russian warships in South Africa taking part in various exercises, so it has caused some tension. But the EU's top diplomat, Kaja Kallas, stressed that whatever disagreements they've had will now be in the past, and they're looking to forge what she said are strengthening old relationships and forging new relationships, particularly in the face of what they see as the assault on multilateralism by the Trump administration.
Anthony, did you notice any tangible takeaways from the two-day meetings? You were speaking to a number of officials on the ground. What would you say?
Well, two things. First of all, I mean, obviously there are some disagreements, but they try to put on a brave face and a united position. So they all seem to be singing from the same hymn book, and that's right from Turkey and India through to Germany and the UK, stressing the need for multilateralism, working together, and not dismantling the world order we've seen in set up since the World War. You know, that's the international financial institutions, groups such as the World Health Organization. And secondly, there was a very strong nod towards South African President Cyril Ramaphosa's aims as president of the G20 this year, in that there was a lot of talk about resolving the conflicts on the African continent, specifically that in Eastern Congo, Sudan, and even in the Sahel in West Africa, which have traditionally been very neglected. We hear a lot about Ukraine, Russia, an awful lot about the conflicts in Gaza. But in fact, Sudan is probably the world's biggest humanitarian crisis, and very little attention is paid to it.
Right, and gets to President Ramaphosa's goals to amplify some of these African-related issues. Anthony Squazzine, Bloomberg senior reporter. Anthony, thanks so much for joining us. And G20 finance ministers and central bank governors are set to meet in Cape Town starting tomorrow. We will be speaking exclusively to South Africa Reserve Bank Governor Lesetja Kganyago, as well as Spain's economy minister Carlos Cuerpo. Be sure to tune in to all of our coverage from there. But still ahead, we'll talk investment strategy with SGMC Capital as investors weigh tariff concerns and a look ahead to NVIDIA earnings. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stocks in Asia trading lower after Wall Street's worst session of the year. Treasury futures also slipping and a gauge of the dollar weakening amid concerns over U.S. economic data and tariff tensions. Joining us is Max Bonduri, the founder and CEO of SGMC Capital. Max, great to have you. Let's just start with the euro dollar. We were talking earlier about how we've seen this strength being tested before, at least when it comes to the euro. We're seeing strength after the German elections. What is your expectation for where this goes next and whether or not we'll actually see this hold?
Well, the current bump up in euro-dollar makes sense because, of course, investors are taking a bit of a sigh of relief post the German elections because, of course, that party that won is a strong supporter of the European Union. So it's normal that euro-dollar has been increasing. So from here, though, we do see a bit of dollar depreciation continuing, but not massive. This is because of the fact that if you look at the macroeconomic environment of Europe, it is not so rosy. Therefore, as much as the dollar has been appreciating up until recent months, and there is a scope for dollar depreciation, especially against the euro, we think that the magnitude of such depreciation is limited. Therefore, could we go and break, well, we have broken already the 105, but could we get to the 107.50s? Maybe. But again, a break of the 110 would really be a surprise for us, and you would need a catalyst in order to see that. But again, a bit of a tactical depreciation in the dollar, also against other currency, is warranted, we believe, at current levels, and therefore the move maybe has a little bit more room to go.
Well, what does that mean, though, when you talk about the catalyst, Max? What could potentially be the catalyst for a change in direction?
Well, if you're looking at the euro-dollar particularly, it's mostly with respect to the European Union. Because from a U.S. point of view, we know more or less the macroeconomic expectations. The economy is doing relatively fine. Of course, we still need to see what's going to come with respect to fiscal stimulus from the new Trump presidency. But more or less, the variables are known. But when you look at the European Union, that's really where you could have an upside if and only if, of course, the countries within the Union are going to be starting to think in the same way and behave like they actually are a bit of a union. It's easier said than done. They have tried it in the past. So far with mixed results, but the potential is there. So again, maybe this could be the catalyst with the German elections, and therefore Germany calling for a stronger coalition of the European Union, maybe seeing some European Union bond issuance, some projects with respect to maybe even a common army. I mean, all of these things which are basically going to be putting a lot more support and a lot of fundamental strength in the union itself are likely to bring euro-dollar higher. The potential is there. The macroeconomic environment is there because European Union has everything to win from getting closer now. But again, whether that happens or not is going to be depending on a lot of different variables.
Max, let's talk about a bit of the beating that we saw on Wall Street on Friday. Do you expect to see continued volatility until we get some clarity? We've been talking about clarity from Trump policies, but it's seeming like that may be a ways out. And so investors need to navigate this current situation right now. What's your expectation there?
Well, so far, 2025 has been playing out exactly as we expected. So quite a bit of volatility with strong up days and strong down days. But if you look at year to date, the actual moves of the S&P and NASDAQ, it's relatively flattish, so unlike European stocks. So we think that is going to be continuing. That's because of the fact that, yes, the strength in the U.S. economy remains resilient. Yes, companies are doing well, earnings are in line. But if you look at what has already been priced in as of the last quarter of last year, a lot of that was priced in. So valuations are not cheap. So we're going to be in an environment whereby excessive corrections are going to be bought. And we have seen that as soon as the market corrects so much, there is liquidity on the sideline ready to be used. But at the same time, once you get a bit of a clearer break to the upside, there's also lots of profit taking which is going to be happening. All of that in an environment which, as you correctly pointed out, there's not so much visibility with respect to tariff threats, with respect to what the Fed is going to be doing, because the fear of inflation coming back because of potential fiscal stimulus is there. So it is normal that we're going to be seeing an environment whereby basically big rallies are sold and big corrections are bought. Now, what investors need to do is navigate that and take advantage of these moves. And volatility is the way, and you can look to play it through optionality.
Does NVIDIA change that sentiment, though, for you, Max, later this week?
NVIDIA is going to be a very important play, clearly. It's an important factor. We think earnings are going to be good. We think earnings are going to be better than expected. But again, how much of that is already priced in? In the short term, it's harder to say. Longer term, we remain bullish of NVIDIA and the whole semiconductor, AI, cybersecurity story. But again, at current valuations, a lot of the positives are already priced in. That being said, if the outlook is particularly rosy, then yes, that could be a potential catalyst for NASDAQ breaking up to all-time highs. But that remains to be seen. And again, we have seen that it's not so easy for that to actually materialize, and you do need something tangible.
Max Banduri, founder and CEO of SGMC Capital, joining us from Singapore. Max, great to speak to you. Thanks for your insights this morning. Now, still ahead, Senegal downgraded. We get the details on the reasons behind the cut by Moody's later this hour. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, here's a look at some of the other stories we are following this morning. Several U.S. government agencies have advised employees to ignore, for now, a demand from Elon Musk's Government Efficiency Office to justify their jobs or face dismissal. The Trump administration started sending emails to more than 2 million federal workers over the weekend, ordering them to report on what they accomplished last week. The deadline to reply is just before midnight on Monday. And Pope Francis remains in a critical condition for a second day as he continues to battle severe pneumonia. The Vatican says the 88-year-old pontiff is still receiving high-flow oxygen to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the Pope continues to be alert and well-oriented. We have plenty more coming up. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The euro gains as Germany's conservative leader, Friedrich Merz, says he'll move quickly to form a government following his party's election victory. He also vowed Europe's independence from Trump's America. Volodymyr Zelenskiy says he would be ready to step down as president if it were to guarantee peace and NATO membership for Ukraine. Plus, a show of unity. Foreign ministers at the G20 stressed the need to protect multilateralism and international institutions which are under assault from the Trump administration. It has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to Horizons Middle East and Africa. And a busy weekend it was for Europe and a busy week ahead, at least as far as corporate earnings are concerned. We do have NVIDIA as well as Dell and Super Microcomputer. But still, still, let's just take a look at where markets are trading just ahead of the trading day. If we take a look at U.S. equities, starting the week in the green right now, S&P futures up just over 0.5%. That coming even after a losing week for Wall Street. We saw the S&P down, closing the week, dropping the week almost just over 1.66%. We got a bit of data souring the mood for investors on Friday. Euro dollar right now, we're seeing the euro strengthening, leading gains actually across major currencies, notably against the dollar right now. That coming after Germany's election on Sunday. Right now, the euro trading up just over 0.5%. A risk-off sentiment, though, is setting in broadly in markets, that affecting EM assets, with the MSCI Emerging Markets Index down almost 0.8% there. We'll talk to Avril Hong a little bit more about what is happening in Asia, potentially to get a closer look into that. And Brent crude marginally down right now and coming off a weekly decline as well. Oil markets, though, have been struggling for a bit of direction, as we've seen over the past few weeks. There's concerns about the supply risks. There's also policy in the U.S. affecting it, and also OPEC Plus's next move weighing in on markets, with Brent crude trading just about $74.31 a barrel. And let's just zero in on our terminal chart to look at the euro dollar right now. Our MLive team actually suggesting that the euro strength potentially may not be sustained, as we've seen this position being tested before and not seen the euro being able to break above that. We've seen this potentially before, and the question is, what does geopolitical tensions and also tension drama have to do with this, and what does that mean for the trajectory for the currency? But we will pay close attention to that. Let's, though, check in on how markets in Asia are faring. Avril Hong is standing by in Singapore for us. Avril, what are you watching?
Yeah, Jen, as the dollar slumps because of the euro surge, we're seeing a bit of a knock-on effect in the Asia-Pacific. Look at the Bloomberg Asia Dollar Index, which tracks currencies in the region, excluding the Japanese yen. We're actually seeing it tick to the highest level since early December. Note how it's moved off its January lows. Now, in the past week, some of this has got to do with the data coming out of the U.S. that shows you maybe this U.S. growth exceptionalism is fading. You had the services PMI, for example, casting some doubt on that. And then also recently, in past couple of weeks, how the tariff threat has evolved. It's not as bad as feared. So all this playing into the FX complex. So it's really interesting to see how Asia currencies, as one strategist from Maybank put it, are free riding the euro surge today. Keep in mind as well that even the Chinese offshore renminbi is gaining ground against the greenback today, and part of this coming despite Trump's salvo against the Asian giant, right? The most sweeping, forceful action yet in his second term. So really interesting to see some of these moves play out today. Jen.
Yeah, very fascinating there. Thanks so much, Avril Hong in Singapore, for us with a closer look at FX moves we're seeing today. Let's turn, though, to Ukraine. Ukrainian President Volodymyr Zelenskiy says he is willing to step down for the sake of his war-torn country. Speaking in a news conference in Kyiv on Sunday, Zelensky said he would happily trade his presidency for Ukraine's NATO membership if such an offer was made.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Joining us is Bloomberg's Greg Sullivan in Dubai. Greg, talk to us about how these comments could potentially affect where we're seeing negotiations at this point.
Well, the first thing that I need to point out is that Zelenskyy's comments are actually coming in response to Trump having labeled him a dictator. Now, at the 3-year mark in the war, they really underscore just what a tough place Zelensky is in these negotiations. The biggest supporter of Ukraine is suddenly critical of Zelensky and his leadership. It's unclear whether U.S. support will be as staunch moving forward. But the comments also underscore the most significant issue facing the negotiations. And it's not Zelenskyy's presidency, but it's the issue of security guarantees for Ukraine. Ukraine wants and needs a security guarantee that they feel will deter Russia from future aggression. Here he's signaling that that is NATO membership, which is off the table in terms of what Russia is willing to accept. Russia has said no NATO peacekeeping force can be stationed in Ukraine, and the U.S. has said that they won't put boots on the ground there. So really there's this question of what is viable and will deter Russia, and that's just not clear at this moment in the negotiations.
Yeah, and Greg, we spent a lot of the past few days speaking with foreign ministers here in Johannesburg about this very specific thing. What comes next, though, in terms of negotiations? Have we heard from the U.S. presidency about some of these comments that Zelensky made?
Well, there's a few things. It does appear that both sides are working to see if they can get another level at the official level meeting. Some moving pieces there. We know that Trump does want to have this leaders summit with Putin, and he's made several comments about how he wants it and wants it soon. It's not necessarily clear that that would be in Putin's interest. He's making battlefield gains and quick talks. But over the weekend, we did see that he appointed Kirill Dmitriev. He's the head of Russia's Sovereign Wealth Fund as a special envoy for foreign economic cooperation. That seems to be some kind of signal that he's willing to sort of meet Trump with these businessmen turned envoys, as he was involved in the first round of negotiations. So an interesting move there from Putin.
Yeah, we'll see where this goes from here. Bloomberg's Greg Sullivan in Dubai for us. Greg, thanks so much for joining us. The Trump administration is said to be turning up the heat on Mexico to place their own duties on Chinese imports as part of their efforts to avoid threatened duties from the U.S. Let's bring in Bloomberg Asia senior editor Bill Ferries, who's been following this story from Singapore. So, Bill, what do we know specifically about the U.S. request, and which officials do we know were involved in making this? Did we hear from Trump?
Well, what we do know so far, and details are still coming in, is that Commerce Secretary Howard Lutnick, Jamieson Greer, who is Trump's nominee to lead the U.S. Trade Representative Office, and another top aide at the White House have all approached the Mexican government with the idea of them putting tariffs on Chinese imports, potentially as a way of avoiding U.S. tariffs on Mexican imports. If you remember, at the start of Trump's term, he promised to put 25% tariffs on imports from both Mexico and Canada. Those were quickly delayed after calls from the leaders until, I think, March 4th, which would be a week from today. So it shows that tariffs are still out there as a tool, and that I think the administration is trying to look creatively at how to get Mexico to perhaps put some tariffs on Chinese imports to start with.
Do we know where Mexico stands on this, especially if you think about that deadline that you were just talking about and the tariffs that are expected to come on the country?
Yeah, well, it's interesting because this could potentially serve Mexican President Claudia Sheinbaum's interests at some degree as well, because she, like the leaders of many countries, have been dealing with an increase of Chinese imports coming in because of the country's manufacturing capacity. So it might help her do something to protect the domestic economy while also helping maintain that trade relationship with the U.S. But again, there's a one-week deadline looming now, and I think that's going to be the focus for both sides, is if they can postpone that a little bit further.
Yeah, we'll see where that goes from here. Bloomberg's Bill Ferries. Thanks so much, Bill, for that update. Now, let's turn back to the Middle East. Turkey's foreign affairs minister says there could be an opportunity for Europe to reduce its dependence on the United States. We spoke to Hakan Fidan on the sidelines of the G20 summit in Johannesburg.
The European friends, they have started discussing among themselves, and there are discussions within NATO. I think the both sides, when they have formulated their own views, they will start discuss with each other. As I understand, some European leaders will go to D.C. and have a meeting with President Trump, like President Macron, Prime Minister Starmer. They will go and discuss these issues.
Do you worry, though, that it could lead to a weakened Europe potentially?
No, that's a very good question. I think so. Yeah, I am worried.
Why? Can you expand on that? Why are you concerned?
Because Europe historically has developed a big dependency on the United States. But it was so big, so all-encompassing to a degree where nobody has, a lot of people has forgotten that this dependency is just there. So it was taken for granted, and many Europeans have started to think that whatever they are having or living is their own making. Actually, what lies behind was, for a long time, a big dependency. I think this crisis might also offer a big opportunity for our European friends too.
How so?
Well, I mean, diminishing the dependency on the United States on very strategic areas, I think will make them, all of us, much more resilient in the face of economic and geopolitical crisis.
What about the increased engagement by the U.S. administration with Russia? I know you met with your Russian counterpart. Does that change the calculus and the negotiations at this point?
Well, it is going to certainly change a lot of things, and on European sphere, on American sphere, on Asian and Russian sphere, for everybody. I think what Mr. Trump and his administration is trying to do, the thing that I am trying to understand, you know, if they are divorcing Ukrainian war issue with other American-Russia relations, so that is something else. So that means there might be two tracks. On one track, they can work on how to address the stopping the Russian-Ukrainian war, and on the other track, how to overcome the existing challenges and problems between Russia and United States. But bulk of the problem has been introduced right after the start of the war. So I think those two tracks are heavily interlinked to each other. So eventually, if Mr. Trump would like to advance the relations or address the current problems with Russia, they need to also find a way of solving the Ukrainian problem in a very proper way.
That was Turkish Foreign Minister Hakan Fidan speaking with us at the G20 summit in Johannesburg. Now, coming up, Moody's cut Senegal's credit rating. More on the economic outlook for the West African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Senegal's credit rating has been cut by Moody's. The cut comes after a court of auditors established that the country's finances during the final term of former President Macky Sall were weaker than previously documented. For more, let's bring in Bloomberg's Ndiro Oganga, joining us now from Kigali. So, Ndiro, talk to us about the downgrade and the concerns behind it, especially for the new administration.
Hi, Jen. So this downgrade was driven by weaker fiscal metrics that was revealed by the audit. And this report further goes to show that the nature of discrepancies leaves Senegal at a significantly limited position in terms of their fiscal space and continues to contribute to their elevated funding needs. Just for context, President Bassirou Diomaye Faye came into power in April of 2024 and immediately ordered an audit into the finances of the government. And that report revealed that debt to GDP was recalculated to 99.7%, above 65.6% that was previously reported by the Macky Sall administration. If you look at the budget deficit, it nearly tripled to 12.3% of GDP from 4.9%. And Moody's says that Senegal is now more exposed to adverse external and internal shocks as they had previously estimated, or rather more than what they had previously estimated. And they say that this negative outlook reflects downside risk related to fiscal trajectory and also government liquidity, and further adds that weak fiscal position is going to affect consolidation efforts like trying to narrow the fiscal deficits in the country.
And yet, despite the negative outlook, Ndiro, we're still seeing Senegal intending to honor its debt obligations. What do we know about this?
Well, Jen, the minister was on a call with international investors, and he assured them that the country has no intention of restructuring its debt. Instead, they will continue honoring their debt obligations and paying their maturities as they come. He also laid to rest claims that the country is facing liquidity challenges, saying that that is not the case. If anything, they're looking for alternative sources of financing just in case there are delays with the IMF program that they're expecting to come forth on the sometime in June. They're also saying that they're looking to implement some reforms in terms of the energy sector and also just continue managing their debt to ensure that the affairs of the country are in order.
Bloomberg's Ndiro Ogange in Kigali with a look, though, at what's happening in Senegal. Ndiro, thanks so much, as always. Bloomberg has learned Kenya expects to receive a $1.5 billion loan from the UAE by the end of this week. We understand the East African nation will get the financing in one go, reversing an earlier plan to stagger the loan. The nation tapped the Gulf state for the funds last year to diversify its budget financing sources. A Nigerian court has ordered the forfeiture of cash and properties traced to the former governor of the nation's central bank after determining they were proceeds of unlawful activity. The country's anti-corruption agency says the court made the order against Godwin Emefiele, who was removed as central bank governor in 2023. Emefiele, though, denies wrongdoing. And a Ugandan court has charged an opposition leader with treason over an alleged plot to end President Yoweri Museveni's 4-decade rule of the East African nation. Seated in a wheelchair, Kizza Besigye, who denies the charges, appeared in court in the capital, Kampala, 3 weeks after Uganda's Supreme Court barred his trial in a military tribunal. The charge of treason carries the death penalty. Now, coming up, Berkshire Hathaway's operating earnings surged 71% in the fourth quarter. We'll discuss what's driving growth for the conglomerate next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Berkshire Hathaway's operating earnings surged 71% in the fourth quarter, driven by higher interest rates and a recovery in its insurance underwriting business. The firm's cash hoard grew for the 10th quarter in a row to a record $334 billion at the end of 2024. For more, let's bring in Bloomberg's Asia Deals team leader, Manuel Bagori, who is in Hong Kong. Manuel, talk to us about the letter that we got from Warren Buffett and also what drove this growth.
Jennifer, it was a busy weekend from Omaha as Warren Buffett disclosed the earnings for Berkshire Hathaway. And definitely a surge in operating income driven mostly by investment and the insurance businesses. The performance of the auto insurer Geico was definitely a remarkable one, showed some progress that analysts highlighted as one of the top drivers for earnings. Buffett also emphasized the importance and the increase in value of some of the private equity investments. Also quite an interesting note on Japan investments, particularly on the trading firms and the potential to gradually increase those investments as also the trading firms relaxed their potential 10% threshold. Overall, it was a positive weekend from Omaha. Some concerns lingering about the potential performance of the U.S. economy, but overall it was a positive one.
But Manuel, when we take a look at 2025, a number of headwinds persist. What's the outlook for the firm for the rest of the year?
That's a very good point, Jennifer. Warren Buffett actually made a point about how about more than half of the operating companies released actually a decline in earnings. And that was perhaps a note of concern, or at least a note of caution. Also, the fact that he's been a net seller of equities partially reflects that potential turning point. That said, the performance by both the investment and insurance business lines was a pretty positive one and was taken with a positive twist by analysts. So the outlook is still too early to tell, but definitely it's a very balanced one for now. Some headwinds, as you well said, ahead. Still too early to call it, I would say.
Did we hear, Manuel, anything from Warren Buffett about the new U.S. administration and what that could potentially mean for the company, especially when you factor in headwinds?
Yeah, I mean, it was all, neutral, I would say, overall. No major remarks. Definitely the fact that some slightly more than half of the operating companies reported decreasing earnings was perhaps the note that I would highlight. Whether or not the uncertainties around geopolitics and the potential outcome of some of those disputes, how that plays out, obviously remains, in everybody's minds. But I think the overall picture was a positive one. I think the remarks on Japan were also an interesting one, and the fact that he highlighted private equity investments versus public investments was an interesting one. Also, that highlight the direction of trouble. He did mention the fact that there was a lot of cash and how he doesn't like to keep a lot of cash being hoarded.
Right. Bloomberg's Asia Deals team leader, Manuel Bagori. Manuel, thanks so much for the update and for joining us this morning. Let's just take a look at where markets are positioned ahead of the trading day. We mentioned we are seeing green on the screen, at least with U.S. equities and also Eurostock 50 futures looking to start in the green, despite what we saw. Friday was a bit of a rough day, at least on Wall Street. There is still a lot of questions about what we're seeing in terms of U.S. policy and also big earnings this week, including from the likes of NVIDIA, Dell, and Super Micro Computer. And just a quick promo, we will be covering the G20 in Cape Town starting tomorrow. Stick with us, but that's it for Horizons Middle East and Africa. Daybreak Europe is next.